Stocks are headed for another negative month as we enter the last trading week of September. And my next guest is using this weakness to jump in, especially to some of the mega cap tech stocks. Here with me now is Nancy Tengler. She's CEO and Chief Investment Officer of Laffer Tengler Investments. Also out with a new edition of her book, The Women's Guide to Successful Investing, Achieving Financial Security and Realizing Your Goals. Congrats.
Thank you,
No
Kelly.
small, even updating, this is no small feat. You know,
it's harder to update.
Do you think?
Absolutely.
Why?
Because you have to go in and say, is that still relevant? What do I think? Oh, that wasn't really well written. Yeah.
Not to do the analogy, but they just updated, the Graham security analysis.
Oh,
and they're
a little more.
saying
a little more.
Some of the same thing. I'll circle back to this in a minute, but are you buying tech stocks here?
We are selectively. We were selling in the summer. Remember, we were buying in October, and then we, they ran pretty dramatically. So we were selling in September. I'm sorry, in July, June, May, and we were adding to industrials. We have now started to trim some of those stocks that have done really well, and we are stepping back in. So one of the names we like is a name that was punished on the earnings call. After the earnings call, that's Oracle.
Oh, yeah.
We think that it's not nearly as bad as what people thought, and so if you go in and look and you see the margins are expanding, you take Cerner out of the mix, cloud computing's growing dramatically, law of small numbers to be sure, but they really are demonstrating that they can grow and expand margins at the same time.
Do you think this kind of goes back to what we were talking about with Tom Lee last week before the Fed meeting, but do you think the market's going to pick momentum back up into the end of the year, or do you think whether it's rates or whatever piece of this we're discussing, it remains kind of a lid on things?
No, I think we'll get a rally going into year end. I mean, it doesn't always happen, as we all know. Just go back to 2018 or last year. Well, last year it did. But I think one of the things that you have to think about is, earnings really ultimately drive the price of stock. We don't talk about them very much except during earnings season. And they are improving, and the market has sniffed that out. But I think one of the things that you want to be focused on in the third quarter is who's delivering on margins. And that's what we are focused on. Many of the companies, particularly in tech, were raising margin guidance. And we're down from historical highs for the S&P margins, but I still think that's a place where you want to be focused.
Because if I'm not mistaken, there is a sense, or the data show that corporate revenues as a whole are flatlining. I think for the next quarter or something that we're like not even expecting any growth there. So if that's the case, especially with inflation receding, it wouldn't be surprising, but it means companies are going to have to try all the harder to wring earnings growth out of that.
But some of that is also skewed by sectors, right? So just from an earnings standpoint, if you took energy out last quarter, we'd be up 3.5%, 4% instead of down. The energy was down like 48%. So I think it is an environment where you need to pick your sectors, you need to pick your stocks. Indexing is harder in this environment because of the averages. And, we have this breadth issue, but that's actually created opportunities for us.
Then lastly, before I want to ask you about the book, but so are you buying in energy, or are you buying in some of these that you mentioned, Oracle? Are there kind of any others that jump out to you here? Yeah,
so in energy, one of the names we like a lot is EOG. It's down for the year, and oil, just in the last 3 months, it's up like 16%. But oil, Brent, is up 33. So you're not seeing the pull through, and I think some of that will come through. But separately, you're getting about $7 in dividends. It was like $7.40 in special and regular dividends on a trailing 1 year basis. So I'm getting paid to wait, and we like that upstream name. And then in technology, we still like names like Broadcom. It's one of our largest holdings. We've had to trim it. But that's a great place to be. We still hold Microsoft. They just raised the dividend 10%. You're getting paid not a ton from a yield standpoint, but the dividend's hefty. It's growing about 10% per year. That's a great offset to inflation.